How many different repayment options are there for student loans? Is the interest rate on a subsidized loan the same as on an unsubsidized loan? And how did two guys start a six-figure business on a shoestring budget? We'll answer these questions and more on this, the 81st episode of the DoughRoller Podcast.
Welcome to the DoughRoller Podcast, where the best thing money can buy is financial freedom. We help you make more, spend less, and invest the rest. And now your host, Rob Berger.
Whether you're just starting out, buried under a mountain of debt, or well on your way to financial freedom, this is the podcast to help you take your finances to the next level. Hey, everybody, this podcast is sponsored by Betterment, the most preferred automated investing service. Betterment has cutting-edge technology to optimize returns, minimize taxes, and save you time and money. Join over 34,000 customers who have already streamlined their portfolio management at betterment.com/roller. That's betterment.com/ROLLER. Well, I hope you're having a great day today. Thanks so much for tuning into this episode of the DoughRoller Money Podcast. Today we have Andrew, one of the founders of Student Loan Hero, on the show, and he's going to talk to us about, well, really a couple of different things. One is about the Student Loan Hero, of course, the tool that he and his co-founder have built that help folks manage their student loans. And we talk about not just the tool, but other issues surrounding student loans, how you can consolidate and subsidize versus unsubsidized, and the different repayment options, and how Student Loan Hero, which is a free tool, can help you do all that. We also talk a bit about how he started this business, which I find kind of fascinating, as folks, kind of out of their garages or family rooms, or in this case, South America. You'll hear about that in a little bit. But how they, on a shoestring budget, start, what is a great business, and have a lot of fun doing it. And so I like to get into those sorts of questions as well. So Andrew was kind enough to tolerate all of my probing into his business, and we had a lot of fun. I think you'll enjoy the interview. Before we get to the interview, though, real quick, wanted to mention an email I received from a reader named John, and kind of interesting. Here's what he said. He said, Rob, was listening to the Annuities podcast, and by the way, that's podcast 73 if you haven't heard it, so go to DoughRoller.net/podcast73. That's an interview I did with Tim Holmes of Vanguard, who covered annuities, a ton of information. So that's the podcast John's referring to, podcast 73. So he says, I was listening to the Annuities podcast and took your advice to use Barclaycard to check my FICO score. First time I had done that here and anywhere else in months. Normally I sit around 780 or so. We just paid off our house and car with lump sum payoffs in April, and now are debt-free. Surprised to see 848 now. No questions for you, but 848 doesn't seem possible or correct, he wrote. Then he said, by the way, your podcast has made a significant difference in our life, from learning about expense ratios to considering early retirement. Thank you. Well, John, appreciate the email. Glad to hear the podcasts are helpful to you. Congratulations on paying off your house and your car. That is amazing. For those that are wondering what the heck Barclaycard is, and isn't that a credit card, and how in the world does John get his FICO score from a credit card? This was something I alluded to in podcast 73. There are a couple of credit cards that allow you to get your free FICO score. And one of them is Barclaycard, and another one is Discover. And I've checked in fact, I'm going to look it up while I'm recording this podcast if I can do it quickly. If I can remember my password for Discover, isn't that terrible? I'm actually going to do a whole other podcast on tools to help you with your passwords. I've been experimenting with several of them. That's for another day. Anyway, I'll see if I can look up my own FICO score. I'm sure it's not 848 like John's is, but in any event, a couple of credit card companies will give you access to your FICO score for free. It's actually part of a program that FICO established as a way to give consumers access to their FICO score without having to sign up for those free trials and then get hooked into these monthly payments. And so I know Barclaycard offers it, and as does Discover. And so John took a look at his 848. It's amazing. It's funny. I mentioned this in an email back to John. It's kind of ironic. He's probably at that point in his life now where his credit score is least important to him. He's got his house paid off. Maybe he'll move. Maybe he'll get another mortgage someday. I don't know. But it's kind of at that point where, it's like when you least need the money, you can get loans easy. When you desperately need the money, it seems like it's impossible to get a mortgage. But in any event, for those keeping score at home, 850 is the maximum. That's the perfect FICO score. By the way, a perfect FICO score, you don't need a perfect FICO score to qualify for the best interest rates, say on a mortgage or a car loan or whatever. Usually you qualify for the best rates around 780. It's not set in stone. It can vary from lender to lender. It can vary over time. There was, at one point, I would have said 760. I think it's gone up a little bit, but again, it does change from time to time. It can change from lender to lender, but somewhere in the high 700s, you'll hit that point where you'll qualify for the best interest rates, the best terms available. Certainly at 848, John could go out and get a very low rate mortgage, but good for him. He doesn't need it. So anyway, enjoyed John's email. Wanted to share it with you all. If you do have a Barclay card or a Discover credit card, or if you end up getting one, you can get free access to your FICO score. And as I tried to log into my Discover account, I now realize that I do not have my password handy. Isn't that embarrassing? Maybe I should have actually looked that up before I started this podcast. I could actually stop the recording and go look it up right now. Well, I'm back, and that was painful. I had to reset my password, but I did it, and there I am. I'm looking at my FICO score, 828. So I guess not bad, but John, 848, you're hitting it out of the park, man. And by the way, I don't have a Barclay card, so I can't compare it. But on Discover, it's kind of, they give you a reasonable amount of information about what that means. So they give you your FICO score, wherever that is for you. They give you an indication of, kind of where that stands in terms of, is it good? Do you need to improve it or whatnot? And they give you information about how FICO credit scores are calculated, whether about how your score can change over time, and they have some frequently asked questions. So there's some decent information on the site. I will tell you, in terms of understanding what impacts your credit score, though, something like Credit Karma or Credit Sesame, which they don't provide your FICO score, they provide your credit score using a different formula. However, the information they give you about why your credit score is what it is phenomenal and will help you improve your FICO score, even though you may be tracking with, say, Credit Karma, a credit score using a different formula. Basically, the same things affect all of the different versions of your credit score. So if you were to improve the score that gets reported through Credit Karma, you're improving your FICO score too. So that's one of the things that I think those sites offer that are terrific. But in any event, Discover, Barclay card, a great way to get access to your FICO score for free. So John, I appreciate the email, and great job on getting out of debt. That's amazing. Okay, so now we want to get on to the interview. As I mentioned, it's with Andrew, one of the founders of Student Loan Hero. If certainly if you have student loans, if you know someone who does, I think this interview is going to be very helpful to you. Andy, welcome to the show.
Thanks for having me, Rob.
Hey, I appreciate your time today. So you're the founder of Student Loan Hero.
Yes, sir.
And I know from readers and listeners that have emailed me, I've got a ton of folks that listen that either have student loans or maybe they're parents of children that have student loans. And so we're happy to have you on the show today. Why don't you tell everyone a little bit about your background and then sort of how you got into this business of student loans?
Yeah, so unfortunately, I graduated from college with about $100,000 of student loan debt. And when I graduated, I had 16 different loans, and they were spread across 3 different servicers. So every single month, I'd have to log into 3 different servicing platforms to figure out what my monthly payments were, when they were due. And then on top of that, I really wanted to create a financial strategy. And I was trying to figure out how much interest I was paying versus principal. I was trying to figure out when my payoff date was going to be. And the servicers weren't telling me that information. So I'd have to take all this information, from the servicing platforms, move it into Excel, and I was building my own repayment plans. And it was just really fragmented. It was really confusing. I'd call the student loan companies. Nobody was really helping me. I actually defaulted on my student loans at one point. I started a company a few years ago, and it was in the very beginning stages. We weren't making much money. And yeah, unfortunately, I defaulted. And during this whole process, nobody was helping me. Nobody was providing smart financial advice. And fast forward a few years, we were fortunate enough to have a software development company. And my business partners and I, we sat down and we really wanted to start building out a product. And I tossed the idea of Student Loan Hero out there. And the timing was right. And we could really provide a lot of value to student loan borrowers like myself. So I don't know if you want to just jump in and talk
about Student Loan Hero. I do,
Yeah.
but I'm an attorney by day. And so that, for better or worse, I hear your answer and I think of 47 questions I want to ask you. So let me dive into your story for a minute. So $100K in student loans. What was your degree in?
Economics.
And when you look back on that, if you could do it all over again, do you think you'd still graduate with $100,000 in student loans?
If I was 18 years old when I first signed on the dotted line, yeah, I probably would do it all over again because you have no idea when you're making that decision. You read the advertisements that the colleges send to you, and it says, get the life that you deserve, get the life that you want. And our average graduate is going to walk out of here with an $80K salary. And a lot of it's just, it's not true. And it's a very emotional decision for an 18-year-old to make when they're pulling the trigger on a $30,000 or $80,000 loan.
Well, and of course you're doing it 1 year at a time. I mean, you plan to get a degree, 4 years or whatever. But when you first went to school and you started signing those loans, did you have in mind that when I'm done, did you have a thought I'll have $100,000 in debt, or were you really just not thinking that way?
No, it's the financial aid office at most colleges do a really good job at getting you to find the funding for the following year and enrolling you. But they don't really keep you conscious of the debt that you're accruing, and colleges don't really do a good job helping you analyze the ROI of attending that institution.
Yeah.
So no, it's not at the forefront of any young college student's mind.
It's almost as if it's a conflict of interest. I mean, the schools want you to get the loans and to get the money so that you can pay the tuition. And not to rag on student aid offices at universities, but it is an interesting dynamic. So why 16 loans? Is that just, it's been, by the way, it's been a while since I've been in school, so I think the student loan system is a good bit different. But is that just the way it works? You graduate typically, most people would have that, a large number of individual loans?
So obviously so the education finance market in the United States is set up a lot differently than, for example, Australia or Great Britain. Typically in Australia, you get a line of credit and you could use it throughout all 4 years at school, and your repayment is typically based on your income. In the U.S., you need to get new student loans every single year, right? So the goal is to max out your federal student loans because they're typically more favorable in terms of rates and terms and conditions. So I was maxing out my federal loans, and then I'd hit that cap right around $30,000 or $35,000. I was going to a private school, and then I'd have to subsidize the rest of the costs with private student loans. So that led to, and when you take out your federal student loans, you have both subsidized and unsubsidized federal loans. So you might take out 2 to 4 federal student loans a year, and then you might also have to subsidize that with 1 or 2 private student loans a year. So you're doing this every year, and you might have 4 to 5 loans a year, and then all of a sudden, at the end of year 4, you have 10 to 20 to potentially 30 student loans. We work with lawyers who have upwards of 26 to 30 loans.
It's just crazy. Absolutely crazy. So one last question before we jump into Student Loan Hero. You said that, I guess as you were, I don't know if it was building Student Loan Hero or your web development company, you ended up defaulting on your school loans. What was that process like? I mean, emotionally, and how did you call the servicers and tell them? Did you start getting phone calls from debt collectors? What did you experience through that process?
Yeah, so unfortunately, a lot of young adults, when they get out of school, they'll move to a city or they'll move out of mom and dad's house, and if they don't change their address with the loan servicer, they're not going to receive the bills in the mail. And unfortunately, that's what happened to me. I moved to Asia to get our software development company off the ground, and I was bootstrapping it over there. And I lost track of payments. I had 16 loans with 3 or 4 different servicers at the time. It's hard to keep track of all that stuff. And it was a very confusing and frustrating and emotional time of my life. I created a lot of conflict and emotional struggle between my parents and I, and because they were co-signed on a few of the loans, and I was able to repair that relationship as soon as I started paying on my student loans. But I could really empathize and sympathize with the borrowers that we work with, because it's just a really confusing and fragmented mess.
Yeah. How did you go? You said you had a degree in economics, right?
Yeah.
How did you go from a degree in economics to a web development company?
Well, at the end of the day, I'm a capitalist, right? And I think my economics course has taught me that. And I just saw a good opportunity to start building websites and software for folks. Literally started a software development company with no knowledge of software development. We started off building websites, like really, really simple blogs and websites first. And obviously, you learn as you progress. But I've been an entrepreneur since I've been 15. My parents are entrepreneurs. This is now my 4th company. So I just have a lot of fun doing it. I just really enjoy building businesses.
Good. Okay. Well, let's hear about Student Loan Hero. Tell us, how it began and how it can help folks.
So, like I said, from my personal story, I was trying to create a financial strategy that made sense, and I was pulling in all this data from my servicers. It was just super confusing. It wasn't automated. I had to do it every month. And fast forward 2.5 years, I was talking to my business partners and said, "Hey, this is a great idea. Let's build out some sort of automated tools that could help a student loan borrower." So, what Student Loan Hero actually does is, if a borrower signs up at studentloanhero.com, they could aggregate both their federal loans and their private loan data in one single student loan dashboard. So they could, one, aggregate all their loans. That's the first problem that we're solving for the borrower. Let's see all that information in one central place instead of hopping around all these different loan servicers. And then 2, after we've aggregated your data, let's analyze the data. Let's give you additional information on the student loan. If you log into some of these servicing sites, they don't tell you the term of the loan. They don't tell you if it's federal or private. A lot of this information is assumed, but the borrower, fresh out of school, has no idea what these debt obligations mean or are. And then we start analyzing also the long-term financial ramifications. How much interest is this accruing daily, monthly? How much interest will it accrue by the time you pay it off? To really bring this financial debt to kind of the front of your mind and make it tangible of what a 6.8% interest rate means over the next 10 years. And then after we provide a little bit more education and analysis on the student loans, the third step is giving recommendations for the various student loan modification programs. And you have both private and federal options. Our system matches their loan types and their socioeconomic information across 70 different repayment options. So as a borrower, if you didn't have something like Student Loan Hero, going through 70 different programs by yourself and trying to figure out which ones you're eligible for is a pretty substantial process.
Sure. Well, let me kind of break that down. So when someone signs up for Student Loan Hero, first of all, am I correct that creating an account is free? There's no cost?
Correct.
Okay. And then is it one of those deals where they input their login information to the various servicers, and then you guys automatically suck in all of their student loan data?
Exactly. So you'll provide some very basic information, your first name, last name. We do need your Social Security to pull your federal loan information, along with your FAFSA PIN, which is your federal PIN that the Department of Ed gives you. then that will go in and will grab all your federal student loan data. And then you could also add some private lenders like Sallie Mae, for example, or Wells Fargo, pool in your private loans. And that's really the first step.
Are there some private loans where you just don't have the relationship with the financial institution to bring that data in automatically?
So we don't have relationships with any of these institutions. We get the borrower to agree to the terms and conditions, and that they provide their information on their behalf, and then we reverse engineer the login process.
Okay.
And we're able to obtain the information that way.
So you don't need Wells Fargo's permission. If I had a student loan with Wells Fargo and I gave you my login information, you could take it from there. Wells Fargo doesn't know if I'm logging in or if you guys are logging in for me.
Exactly. And there's a bunch of companies that do this, like Yodlee, for example. They powered Mint.com for the first few years that they're up and running.
Okay. And then you mentioned repayment options. And again, it's been I have a vague memory. I mean, when I graduated from school, the internet didn't exist, so these options weren't available to me. I know I'm really showing my age here, but so can you kind of give us sort of a high level overview of the repayment options? You mentioned there are 70, so I know we can't go through all 70, but maybe just sort of a high level overview of what those are.
Yeah, so there's like I said, there's both federal and private options. On the federal side, there's some really great programs out right now. So there's if you're looking to lower your monthly payments, which a lot of borrowers need to do, the federal default rate's around 14% right now, and a lot of these borrowers can be avoiding default by simply enrolling in one of these loan modification programs. And the first one and the most popular is income-based repayment. Typically, if you make under $60,000, you can apply to this program. It's free. There's no origination fees or closing costs. What this program does is it pegs your student loan payments to your income, about 15% of your monthly income, and that makes it really, really affordable for a lot of folks. Along with income-based repayment, there's also a few other income-based repayment programs, such as income contingent repayment, pay-as-you-earn. They're just similar variations of income-based repayment. Another federal program that actually 1 in 4 Americans qualify for or can qualify for is public service loan forgiveness. So folks that are working in a nonprofit environment or a religious institution or active duty military, they could qualify for public service loan forgiveness. And depending on the institution, you're typically required to work at least 5 or 10 years at that institution. And then after that time period, if you've been making your loan payments for that time period, you get the rest written off. Keep in mind, you do need to pay taxes on whatever would be forgiven.
Oh, that's a good point. Yeah, just like the forgiveness of just about any debt.
Yeah.
So with your tool, then, when folks connect all of their accounts, you'll sort of run through these. You'll crunch the data and show them what their repayment options are, and what that would do to their payment, and I guess how long it would take them to pay it off, and all that sort of thing.
Exactly. We're building in more of the advanced calculators in, like what would your monthly payments be on income-based repayment. We haven't integrated all that stuff yet. But something else that we haven't talked about here is, I noticed that you had SoFi on, I guess, 2 weeks ago now.
Right.
And they're a great partner to us, and they could really help a lot of folks refinance their loans. There's a lot of people that are out there with 8% or up to 12% loans with Wells Fargo or Sallie Mae, and folks like SoFi and Common Bond, Darien Rowayton Bank here in New York. They could come in and take that 8% loan down to about 3%, and that could save people substantial amounts of money over the long term.
And you show them these options?
Yep. Yeah, we show them those options as well. We also have like a student loan refinancing calculator to figure out if it actually makes sense for you, because a lot of times maybe you'll take something from a 10-year term out to a 15-year, and you'll go from a 6.8 down to like a 4.8, and that's a very close calculation. Are you going to? It depends on what you're trying to accomplish. Are you just trying to lower your monthly payments, or are you trying to save interest over the long term as well?
Right, sure. And I take it you guys have relationships with these various financial institutions, and that's how you're able to offer this service for free to the consumer.
Yep. So it's a freemium model. We give away the tool for free, and then we collect advertising revenues from some of our lender partners that we work with.
Okay. Yeah. One question that's come up, I guess it's funny. I do so many of these podcasts. Sometimes folks will write in and say, well, you said such and such, and I'm like, did I really say that? I'm sure I did, but it came up recently about whether subsidized loans have the same interest rates as unsubsidized loans, and I guess I just assumed that subsidized loans were cheaper. And I think that came up in the SoFi interview, maybe. Mm-hmm. But a reader emailed in and said he didn't think that was right, that they were actually the same rate. So what's your experiences between subsidized and unsubsidized loans?
Most recently, we've been seeing subsidized loans around 3.4% and unsubsidized loans around 6.8%. And then last year, there was new legislation introduced that changed those rates again. I don't know what they're at currently. And I believe they're actually slated to change again this year. So it's a constant changing environment, depending on interest rate conditions, depending on federal funding, Department of Education funding. So the amount of subsidized loans and unsubsidized loans changes every year, and also the interest rates change pretty much every year.
Okay. One thing we haven't talked about is deferring your student loans. Is that option still available, and how does that work?
Yeah, so there's a lot of fresh grads that just got out of school this past May, and they're going to be so when you graduate from school, you're looking at a 6-month grace period, right? So you have 6 months before you have to write that first check to your student loan servicer, and just the nature of the situation, there's going to be a lot of grads that aren't able to find employment, and they need to figure out what to do with their student loans. And for some, deferment or an economic hardship forbearance might be the best option. So what a deferment is it will just put your payments on pause. For federal loans, you could pause your payments for up to 3 years. And on subsidized loans, the actual interest that accrues during that time period is the government pays for it. So that's a great feature. But keep in mind, unsubsidized loans, the borrower is going to have to pay the interest that accrues during the deferment period.
Yeah, big difference.
Yeah, but overall, if you look at it as a tool, it can be a great option for folks instead of going into default. Because if you default on your student loans, you're not only affecting your credit score and you won't be able to refinance in the future, but I lost my train of thought there.
Talking about if you default on the loan, you lose.
Yeah, sorry. If you default on your student loan, you're going to get tacked on about 18.5%.
Wow.
Collection fees.
Yeah, not good.
No.
Okay. Yeah. So what about we kind of touched a little bit on calculators that you guys offer.
Yep.
One of the questions I get a lot from folks, and it goes beyond just student loans, but they've got any number of debts. They're all at different interest rates. Could be some student loans, could be credit cards, car loans. And they're trying to figure out how do I attack this? How do I pay this off? What do I pay off first if I have extra money? Do you guys provide any of those sorts of analysis, at least as it relates to the student loan portion of folks' debt?
Yeah, so we have actually a really cool amortization calculator. So when you have 16 loans or when you have 26 loans and they're all different interest rates, it's tough to figure out what the amortization schedule is going to look like. So inside the Student Loan Hero app, we have a simple calculator. You just adjust your monthly payments. If you have an extra $100 or extra $200, it will apply it to each of those loans, either based on the highest interest rates first or the lowest principal amounts first, based on the famous Dave Ramsey debt avalanche or the snowball effect.
The old debate between the avalanche and the snowball.
Exactly. Yeah. So we let users decide which strategy they want, and then we provide some commentary on which loan that they should be accelerating and what those new monthly payments will look like. On top of that, we also have like a refinancing calculator to figure out if refinancing is a good option for you. A lot of folks have been asking us if they should prepay their student loans or invest, which I think is a really interesting question, especially if you have a 401k. It's kind of a tricky question because especially if you have like 401k matching from your employer. But that's a great calculator as well. We also have a student loan deferment interest to figure out how much interest you will accrue during a deferment period.
Well,
so Yeah, a lot of great calculators.
Yeah, I'm a big fan of if your 401k matches, take advantage of it.
Exactly. It's free money.
That's my view, but folks have to make the decisions that are best for them. So if folks want to check this out, obviously the place to go is studentloanhero.com, right?
Exactly. Yeah, just go to studentloanhero.com. You can create a free account. It takes less than 5 minutes to get your loans synced and start figuring out ways to save money.
I almost wish I had student loans so I could log in and check it out. Actually, that's not true. I don't wish I had student loans. It took me 20 years to pay them off.
Yeah.
But I do wish this tool had been available for me. It made things a lot easier. So let me just step back from Student Loan Hero for just a second before I let you go. And I appreciate your time today. You mentioned that you'd started a number of companies. Student Loan Hero, would you view that as your most successful?
Yeah. I mean, I'm still learning and growing as an entrepreneur. I'm 27 years old. So I've had 3 cash flow positive businesses and 3 profitable businesses, and one that was a complete failure back in college, just one of those terrible clothing idea companies that every college student has. So yeah, I'm having a lot of fun building Student Loan Hero. I'm getting a lot of fulfillment and satisfaction in the personal finance space, and really helping a lot of young adults figure out their finances.
Yeah, but the stories of the failures I think are so important because we always hear about the successes because that's how folks get on podcasts and TV and radio because they've got a success story.
Yeah.
But you got to experience oftentimes the failures before you hit the success. Why didn't you give up after the failure? Did you think about, maybe I should just go get a job and forget this whole business, trying to start a business thing?
If I worked in a corporate environment, I think I'd get fired in the first week or two.
Fair enough. So when you started Student Loan Hero, did you code the site? Did you have, just 2 of you working on it, 20? How did it begin? Or day one, what did you do?
Yeah, so day one, we actually applied to a business incubator. We got accepted into a business incubator in Santiago, Chile. So we moved down to Chile.
Man, you're all over the place.
Yeah. I've been fortunate enough to travel quite extensively. But Santiago, Chile was just phenomenal. There was an ecosystem of about 400 entrepreneurs down there. We got $40,000 equity free from the Chilean government, and it was really an economic development program. It's not the typical venture capital type of model here in the U.S. It was really focused on building the local talent pool and transferring knowledge from smart human capital from all over the world.
How did you learn about that opportunity?
I was living in San Diego, and I was working at a co-working space, and I literally just ran into this guy, and he said, "Hey, I'm applying to this great incubator. You guys should check it out." And literally the application was due that day. And then a month later, we're on our way down to Chile. So it was very serendipitous.
And how many of you were there when you started?
There was 3 of us. And we're still a really small and agile team. There's 2 of us full-time, and we work with about 6 contractors. So we're really focused on staying lean and agile. We haven't had to go out and raise money. We're completely bootstrapped beside a small seed investment. So we're really proud of that. I think in the startup ecosystem, a lot of companies are over raising, and it makes things a lot tougher for them in the long run. So I think we're doing it right, and we're growing organically, and we keep seeing month over month growth. So we're really happy right now.
That's fantastic.
Yeah,
that's great. Now, where are you located now?
I'm in Manhattan. My business partner is still in Santiago, Chile. Our other business partner departed the company. But we're completely remote and virtual. I'm actually sitting at home right now, so it's a good lifestyle. It's very, very mobile.
And is your company 100% Student Loan Hero? Because you mentioned web development. Do you do other things besides Student Loan Hero?
I do some design consulting on the side. I do like user experience design and user interface design. And you asked that question earlier, how did we go about first building the tool? Building a software development company 4 years ago, it gave me all that rich experience in developing interfaces and developing user experiences. And paired with my economics background at college, it just gives me an interesting vision for building out a product that not only is user friendly but serves a business purpose as well.
Do you do any of the coding yourself?
The front end stuff, I'll do like some of I make websites look pretty. I don't make them work,
right,
but I make them look pretty. So my co-founder does all the back end development.
Well, pretty is important. I mean, design is critical, so that's great.
Exactly. Yep.
All right, Andy. Well, listen, I appreciate your time. Is there anything I haven't asked you that I should have, or anything else that folks should know about Student Loan Hero?
No, that's about it, Rob. I really appreciate you taking the time and having me on the show.
Well, thank you, and good luck to you and your business partner and your company.
Thank you so much.
Well, there you go. Hope you enjoyed the interview. If you have any questions about student loans in general, Student Loan Hero more specifically, don't hesitate to shoot me an email. And if you've used Student Loan Hero, or if you end up using it, shoot me an email. Let me know what you think. I like to hear from folks. I'm happy to say I don't have student loans anymore, although it took me, I think, 2 decades to pay them off. So I'm happy to report I don't have a need for Student Loan Hero. But maybe you do, maybe someone you know does. And so if you do use it, if you give it a try, shoot me an email. Let me know what you think. You can email me at dr@DoughRoller.net. As you know, I read every email and I respond to every email. So would love to hear from you. You can get the show notes to this episode, including a full transcript of the interview with Andrew. Just go to DoughRoller.net/podcast81, podcast 81. Again, you'll have a full transcript there if you want it, as well as links to the resources mentioned during the interview. So you can check that out. And lastly, before I let you go, if you haven't signed up for our weekly newsletter, you can do that. Just go to DoughRoller.net/newsletter. It's a free newsletter that I send out every Saturday. And it's very straightforward and simple. It's basically just a series of links. It's one way to keep track of all the things I publish on DoughRoller. But more than that, I include links to content. I write for Forbes, I write for U.S. News, so I include links to that and for those articles. And I also include links just to other stuff on the internet that I think can help folks make the most of their money. Sometimes it's stuff that I just find interesting or funny, or that can help you be a better investor, a better manager of your money, help you get out of debt. Anything that I see on the internet, and I'm looking at it every single day as part of my job, which is this podcast and a blog. And so I find the stuff that I think is the most interesting, the most helpful, and I put it in the newsletter, and that's what it is. And it goes out every Saturday. If I'm on my game, it goes out every Saturday at 7 p.m. Eastern Time. So sometimes it goes out a little later, but that's the plan. That's what I do. And I've gotten a lot of great feedback from folks that really enjoy the newsletter. So, if you do get it, let me know what you think. If there are things you'd like to see me do differently, I'd love to hear from you. But if you haven't signed up, you can do that. It takes you all of about 12 and a half seconds. Just go to DoughRoller.net/newsletter. And there you go. Hope you enjoyed this podcast. Remember, until next time, what's the best thing money can buy? You know what it is. It's financial freedom.